What a magical day it's turned out to be for equity markets. After that initial bit of chop and churn, we managed to close at the day's highs and well above the 14,000 mark for the Nifty, and a 2,500 point solid gain coming in for the Sensex. And that's how the budget was. Why wouldn't you have the bulls actually charge up and animal spirits come back? Let me just walk you through what couple of the announcements that were made by the finance minister. The finance ministry, of course, today announced a slew of measures to try and stimulate infrastructure sector, boost the credit flow by taking out of all of the toxic assets of the banking system, which actually helped the Nifty to reclaim not just the 14,000 psychological level, but close in almost with a 700 point gain. And similar was the move on the Nifty Bank as well, which managed to clock in a fresh high for itself. Names like Nifty Bank, ICICI Bank, SBI were almost to the tune of about 10 to almost double-digit gains coming in for most of those names. Not just that, bad banks, as well as a 35% increase that you saw in infrastructure allocation, the hike in FDI limit in insurance, the big pipeline of disinvestment, along with the two PSU banks that managed to flare up the banking pack as well quite smartly, and PSU banking stocks as well were very charged up, like I mentioned, SBI being one such case in point. Also, what the market has taken cognizance of is that the government is willing to let go and announce a higher fiscal deficit if indeed that proceed is used, or that comes at a cost of higher growth and higher capex to try and infuse growth back into the economy. And I think that messaging went down very well with the equity markets. All Nifty sectoral indexes, barring Nifty Pharma, they managed to hold up in the green. Leader of the pack, of course, like I said, were Nifty Banks as well as financials. They held out very smartly. Also, the scrappage policy got announced. You had the Nifty Auto index as well, scale up quite smartly. Big moves coming in when it comes to the money markets as well. That is something that has to be mentioned today, because you've seen the biggest spike in the 10-year yield, which rallied about 15 basis points, mind you, to about 6.05%. Also, that's the highest level that we've clocked since September 29th. That's last year, 2020. Also, the rupee saw a big decline coming in. The rupee declined by about 10 basis points to about 73.03 levels to the US dollar. So that also was something to take cognizance of. The other big thing is that not just there was a big move in the equity markets, but you also had the India VIX cool off quite significantly. So that initial bit of volatility, even post that, you had India VIX actually cooled off by about almost 8%. The budget has done its bit. It's really been a big breakout for equity markets, no doubt. And most market participants that we've been chatting with do believe that, there is reason for the bulls to be charged up for the next few days as well. So this is not a flash in the pan, a knee-jerk reaction that you saw today. The gains are here to stay. That's the message that we've been getting from most market participants.